All right. Good evening, good morning, good afternoon, wherever you are on this awesome planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, and I'm definitely happy and grateful for each and every one of you being here with me this evening as we check out the technicals and we check out the fundamentals to see what we can take advantage of in this Forex market. So without further ado, let's make sure, as always, everybody, turn off any and all distractions. Grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. And if everybody can hear me loud and clear, let's get the early participation going. Drop me a 1 in the chat. Let me know that you're ready to go, and we can get things started. All right. So just let me close out of here and jump on over to the Forex Factory. And of course, today we had Chairman Powell speaking today, and it was just really about central bank independence, right? So really not a market mover, so to speak. There was a statement that he made. Powell says unpopular decisions are necessary to bring down prices, right? So hey, price stability is the bedrock of a healthy economy and provides the public with immeasurable benefits over time. But restoring price stability when inflation is high can require measures that are not popular in the short term as we raise interest rates to slow the economy. The chairman said in the prepared remarks for the panel discussion in Stockholm. So that was pretty much the extent of it. Nothing that we really don't already know. We also see here that just came in, right? The recently Australian CPI inflation accelerated to 7.3%. The monthly consumer price index indicator, Australia, increased by 7.3% in the year to November, accelerating from October's 6.9%, matching the market consensus there. So it just fits the narrative, right? What these central bankers are talking about, that inflation still has to be the number one focus. Australia retail sales growth beat estimates, right? So they're just chugging along in Australia. And we can all see that we do have a strong Aussie dollar right now. And we see that oil decline on large US stock build, right? So US has a large supply of oil right now, which kind of plays into those demand fears. So still a mixed bag. You got some positive data that some are saying, hey, the way this is going, it looks like we may be able to avoid, right, a long, hard recession. Some people are saying, hey, that's still to be determined. So, of course, the market sees things going one way and the Fed sees it going another when we talk about 2023. And, in regards to rate hikes, how far are they going to hike them? How long, once they get them to the level that it needs to be, the interest rates to the levels that it needs to be, how long are they going to stay? All right. So again, like we've been talking about, Fed said, hey, don't get too far ahead of yourself, talking to the market. And the market says, we see the Feds taking their foot off the gas pedal. And some investors are saying they may even cut rates towards the end of the year. So it's the same back and forth. But like they say, like we said this morning, they don't bet against the Fed. So definitely not going to bet against the Fed. All right. So Thursday, big CPI data coming out on Thursday. That's what we're all looking for. That's what the market's watching for, is to see if we're going to have 7 straight months of declining inflation pressure. And we'll see what Jerome Powell and the central bank has to say in regards to those numbers that are released on Thursday at 8:30 a.m. So that's the major report this week that the market is waiting for. Of course, we got GDP coming out for the pound. And then we've got the University of Michigan preliminary consumer sentiment report. So that's it. So the big one is Thursday, and we'll see how that comes out. Any questions fundamentally?
No.
All right. So same thing, right? Same back and forth. All right, the ebbs and flows of the market. Like we always say, the good thing is in the Forex market, you make money on the way up and on the way down. So it doesn't matter, right? So tonight, I just want to jump in and we're going to get through this session definitely because I have a big, huge presentation tomorrow. So we're gonna try to keep everything on schedule. Might even end a little bit early. But first, let's go over and take a look at the dollar index. And we can see, right, still holding steady at that level. Waiting for Thursday. I think Thursday is going to be the catalyst to let us know short-term reaction for the dollar, whether it's going to push below that support level, okay, or we're going to move back to the top of that range, or possibly beyond. Okay, so that's where we are. Still range bound for the US dollar. Okay, that's where we are. It is what it is, right? We can see here on the 4-hour where we have formed a low. Got some nice little bullish momentum, but we've settled back down. Okay, but still holding above that 12,810 level, that monthly support level that we've been focused on. Okay, just won't break and stay below it. So we'll see what happens as we head towards Thursday. Any questions on the US dollar? Nope.
No.
All right. Appreciate it. So we've been talking a lot towards the end of last year and moving into this year, just about, hey, that top-down analysis, trying to gain a directional bias. And we've been focusing a lot on those levels, those support and resistance levels from the higher time frames on down. Wanting to get consistent at that, wanting you to see the value in that, right? And then, right, so now what I want to move into is, hey, top-down analysis, okay, just to review, we started to formulate our directional bias based on those key levels, and now we want to drop the fib zone, okay? So what I do is, and those of you who have been with us for a while, you know this, but I love going to, and there's a lot of technical tools out there, right, that kind of gives you those summaries, okay? But for our new members of the group, right, this can help you out, give you a visual. Okay, so when you look at your moving at averages and your major indicators used, you have a technical summary. Okay, on investing.com. It's free. Start up an account. You go to technical summary. Okay. And this is important as, hey, top-down analysis, develop technical, our technical bias in regards to what direction we think a particular currency is heading. All right. And then now we want to start to work. Okay, so which direction do I primarily for those swings, right? We've been doing a lot of break and retest stuff. But for these swings, which way do I want to deploy my fibs, right? Overall. Okay. So if we come here and we come to the technical summary, and I set this up similar to my workspaces. Okay. So, we do the monthly and the weekly. We have a daily chart. They don't have a 4-hour chart on here, so I use the 5, and then we have a 1. Okay. So for this Aussie CAD, all right, if we've done our top-down analysis, we've marked our support and resistance from the top down, and we say our directional bias is bullish, we come to a site like this and look at the technical summaries, and we see strong buys across the board for the most part. Which way do we want to deploy our fibs? Right? We're talking about swing trading. Okay, we're moving in that direction for those longer plays. Right? Up. Yeah. Thanks, Jared. Appreciate it. Right? Want to deploy them up. So let's go. Let's go take a look at the Aussie dollar. The Aussie CAD. So we can see that when you look at the long-term swing from the weekly, we've been moving up. As a matter of fact, it corrected. Okay. And now we have a new low here, swing low. So if we put our support like that, you've got a level there, long-term, weekly chart. Make this real as simple as possible, so we all can agree that this has been moving bullish. Drop me a 1 if you agree. Okay. Something that seems simple, right? But we know that a lot of times traders struggle with getting overall direction right on the trade. Okay, so as small and as simple as it may sound, is very, very important. Okay. So we're moving bullish. So we want to start to deploy our fibs in a bullish capacity. Okay. This is moving to the upside. Okay. So what I do is I always come over to a low, try to find a low and work my way over. Right. So there's our extreme low. What happened on that move up once it corrected? Took them out. Okay. And now we move to the downside and we can see how we took out a high here. And that's what we've been focused on. And we retest. We got to retest and we're moving back up to that 93.31 level. Okay. So now, hold on 1 second. All right. Okay, I'm back. So we deployed them to the upside. So we see our long-term fib here on the daily. Okay. Got an A, B, a C, long-term projection. Right now, based on our bias, this is our D, our 1.618 D extension, long-term target. Any questions on that?
No.
All right, clear. We've done our top-down analysis. We do our homework, right? We do our homework. Hey, that Aussie looks bullish. All right, A, B, C, D. So what I could do is to say, you know what? Off this low. Now look at that, right? So the reason why I started the year off, well, towards the end of last year and coming into the beginning of the year is because it's like, sometimes our mind can just go all over the place, right? When we drop a fib or some type of indicator on the chart. Price is still moving in waves, higher highs and higher lows. It's still breaking and retesting, right? You still have a break and a retest. Oops. Okay, still have a break and a retest there. The fibs are just going to help us measure, right, where price may end up. So I could come here off this direction and say, well, I have a 61.8 pullback. Okay. If, right, long term that Aussie stays long, okay, we can have over 500 pips of bullish buying potential. Right? That's it. So what you could do is you could say, you know what, based on this correction, 61.8 off weekly support, that's why it's important. As resistance becomes future support. This is the weekly level, we have it in blue. That helps us, right? When the price was correcting, where might we see a U-turn if our bias is bullish? Right? Maybe in the zone. So 90.42, 1.618 D extension, what you can do, trade on the lower time frame, you can say, you know, this level here, 96, 174, that's my long-term target. We stay bullish. 96, 74. So I'm going to link that down to the lower time frames. It's a long-term target. Now there's going to be a lot of levels in between, right? So this is my daily 1.618 D extension. Like so. I could take that down to the lower time frames if I want to. All right. So that's labeled. So right now, off this break and retest at the 61.8, we've moved bullish at its highest point, 293 pips, 208 right now. Okay. So we're pushing bullish. Now we can get all types of reactions. And that's where, you know, a lot of times when we're swing trading, we can get confused, right? Because price starts to move everywhere. But as long as price doesn't take out that A, it has no choice but to go your way. Okay. Has no choice but to go your way. You have to keep that in mind. So price on the lower time frames can move all over the place. All over the place. But as long If price stays within that AB boundary, continues along the path, that C to D push. However, however it chooses to get there, consolidation, breakout, push lower, retest, 90.42. Long as it stays within that AB boundary and it continues somewhere along that path, we got a 1.618, the extension target. Okay. So that's where we are now. We're swinging. So if we come down to the lower time frames, we start to zoom in on that price action. See, okay. So you got a smaller wave. You got a smaller wave here. Okay. So you see along that path, you have multiple. And you see how we broke into that buy zone. Okay. There's that 85.97. There's that same weekly support level on your 4. There's your break long into the buy zone. Okay. Now we've got a pullback almost 100%, didn't quite get there. So we expect a 118 extension right here. So if I'm playing my 4-hour fib and my 4-hour wave, here's my reset. Here. Extension hit. Okay. We get there, extension hit. We look for a new AB boundary, but we're working our way up, to that daily target. Everybody follow me on that? Drop me a 2 in the chat. Okay. So if you look underneath the fibs, we're still breaking and retesting, right? We're still breaking and retesting levels, right? You should see that clearly now. We're still breaking and retesting. Look, break, retest, right? And we're moving up off that level. Now, if you got your direction in your lower time frame and you're a break and retest trader, it helps you to understand that, well, in this fib sequence, I am now in the C to D push zone, right? So I can continue my break and retest plays bullish to the upside, right? Whereas if I'm in a up retracement zone, I'm looking for breaks and retests to the downside on the correction play, or if we come into that 80-20 zone. Okay? So this is where it all comes together. Now we want to spend the month of January making sure that we really work hard at getting this, right? Because now once I've got my top-down analysis, my support and resistance marked up, I've formed a directional bias if I can. Sometimes you can't, right? Sometimes it's so choppy and it's just like, you know what, I'll move on to the next pair, right? Sometimes your time frames are mixed, okay? Because of the price action. But if I could determine my directional bias is long, now it's just a matter of my trade plan. Well, I've got my direction. What does my trade plan say if I'm using the fibs in regards to where I like to take trades, right? Do I have a trade plan that says, I like impulsive moves, right? That if I get a push off of a 236 and it breaks the B boundary, maybe there's a break and retest play that I'll take up to the upside, up to this 118, 127 level. Do I take trades off the 382 and put my stop below the C? Will I play that? Or do I wait? My rules say I wait until price comes down into the buy zone. My directional bias is bullish. I want a discounted price. I want 61.8%, right, on the discount, or 78.6% or 86%. I want the rock bottom discount for its potential buy, right? What does your trade plan say? Okay. In regards to if I'm trading with the trend, what are my levels? And I like trading off the 61.8. But in my trade plan, I have it where, hey, I look to trade at the 61.8, but I would love to look left and see past structure, past levels of support, or past resistance becoming future support in this zone. That'll give me a little bit more confidence, not just because it hits the 61.8, or I need that swing low to form in this zone, or I have a trend line break, or should I say or, right? Because it could be all, right? Scoring your trade, grading your trade. If you look for 3 or 4 or 5 or 6 things or whatnot to occur once price gets to your level, that's grading your trade. Now, if all of those things that you have, that you look for, once price gets to your sweet spot, if all of those things you could check the box, then you check, then hey, I give it a high grade, I'm taking this trade. And why do I give it a high grade? Because I know over time since I've been trading that if those boxes are checked, that's my edge. Right? That's my edge. That's how we have to think. Okay? So for in this example, if my sweet spot, right, is that 61.8 zone and lower, and my stop's below the A, okay? Below the A, which is really saying what? Is below support, right? Below this major support, right? That trade is still good. It came back to retest. See, we can't control all of this. We don't want to constantly get caught timing all of this, because that in essence can become a full-time job. Now I'm talking from a swing trading point of view tonight, okay? I can't control all of this whipping around. What I can control is doing my homework, doing my due diligence, and letting the trades come to me. And when it hits my level, I work my risk management out and I take the trade. See, if I have my levels, okay, yeah. At a 61.8, yep, I'm in drawdown, but my risk is calculated. I lose that trade, I'm out of 1%. If I have a secondary order at the 786 and I'm in there at 1%, if I lose this trade, trade and it hits my stop, now I'm down 2%. Or I'm putting a 0.5% in, 0.5%, and now I'm out of 1%. Or a quarter and a quarter, and I'm out of 0.5%. Okay. That's how we have to think. So a trade that was initially in drawdown is now in profit. 4-hour target here. See how that works? AB boundary, concrete. Concrete. Only thing that floats is your C and your D. Okay? Your C correlates with your D. So on this original 61.8 pullback, my initial take profit was here. 1.6, the extension. Once price made its mind up that it wanted to correct deeper, Fibonacci principles say based on, right, the retracement level, I now have less momentum to the upside. So I bring that take profit down. Okay? Because I've come into that 8.6 level. Didn't quite make it to the extension, so I still want to project that 118. Now, had we tapped off of, right, we're just shy of it, okay? Had we tapped off of that, and you can still mark this level if you want to, if you get a 100% pullback to retest that 8 boundary and price holds, kind of like it almost did here, right? It's pretty much there, then you can bring it right back there and say, you know what, I decided to get out there, back to the B boundary. But the way we know that it just missed that 8 boundary is because you can see where price made it right back to this B boundary, but your fib is still highlighted. That lets you know that price on this correction didn't quite make it back to that A, to that support, to that price level. So we're still in an active swing. So our projection on the 4-hour move is right here at 93.80. Boom, it gets hit. We form a new high somewhere. Our C becomes our new A. Our D becomes our new B. And we look to continue to that 1.618D extension off the daily. That's how the concept works. Any questions?
Hi, Benny. Just a quick one.
Sure.
Assuming the first TP profit is hit on the current fib and the new fib forms, do you have to wait for price to hit the buy zone, which is the new 618, to the new D extension, or you consider the old D extension?
So you're talking about once this finishes out?
No, if the first take profit is hit, for example, the B boundary is hit.
Oh, this B boundary is hit?
Yeah.
Yeah. So I was just saying, if you wanted to make that as a target, so you see how it got close to this extension here, right? Yeah. So what you want to do is, so this is still active. So this is still going to be my target. Now, had it actually came and actually hit right at that price level, this fib wouldn't even be activated right now. You see how it came up and hit that B boundary? Yeah. If that B boundary was the TP level, this wouldn't be highlighted. So it's just shy of it. But if you wanted to take profit at this level, then say you get out at this B boundary, then what you want to do is let it run to that extension and then wait for that next fib.
Okay.
So you can take profit here or reduce the majority of your position here, and let the rest run. Maybe move your entries into your stop loss into profit or break even. And then say you take off 3/4 of it and then you just let the other quarter run here to this 118 extension and this TP, this correlating take profit level. Okay. Then you wait, because it not only has to hit that level, it has to do what? Form a high, right? In order for that new fib to activate. So we already have our C, because that's our swing low, deepest point within the AB boundary. That's our C. Okay. So once this D extension is hit, you know how price can get impulsive and just keep pushing. So we have to wait for a swing high to form. So boom, it's hit. This fib will deactivate. And then once you get a new swing high to form after the extension is hit, you get a new fib. Okay. And then it's just a matter of whether or not price at that point wants to correct right away, right? So you're right back in that same scenario and you're right back to your rules, see? Or, right, we get our shallow retracement move. Okay. And then up, and then potentially back down. Okay. Or you get momentum to pick up and you don't really get a correction at all, and it just shoots to the relative D extension. Okay. And that's why I love the fib so much, because it really only puts you in there's only a few scenarios, right? Once a fib sets up, it's either swinging right off that B boundary and it's correcting to the downside, and you say, you know what? If I'm just going to trade with the trend, then I'm going to wait to see if it'll come back into my sweet spot, that heavy discount, right? If it's a shallow retracement, hits that 236 zone or less than a 382, and it shoots up to that 118, 127 zone, do you know I've got an 80-20 on my hands? Do I want to play this counter trend move? Right? Do I want to play that counter trend move if it comes into this zone? If the answer is no, and you're looking, hey, I'm just a buyer, then you just, even if it pushes up into that and gives us that 80-20 move, then you're just gonna wait for it to come back down. Right? You don't have to, right, trade these moves, these counter moves, right? If you're a trend trader, then you're just waiting, get your directional bias, and you're just waiting for it to come in your sweet spot. Look, have your rules set up in regards to, right, grade your trade like I was just talking about, and then you take the shot, right? And you play your percentages. That's how it works, right? So if I didn't Okay. If my rules are 61/8 or deeper, and when I saw this trade and this opportunity, if I caught the move on this fib, then if my rules are 61/8 or deeper, I didn't get it, right? It gave me a shallow retracement and it just accelerated. That's okay. You have to be willing to stick to your rules and say, you know what? I'll catch the next one. I've got 20 plus other pairs to trade that I'm applying my rules to. Let me move on. This one doesn't meet my rules. Because if I don't have rules, right, and a game plan to trade off a 236 in an impulsive move, and I take that trade off the 236 and then it corrects to the downside in an 80-20, now I'm in drawdown. And I might eventually win the trade, but I'm in drawdown. Which can be a headache if I didn't plan for that. Right? What's the future cost of that if I'm constantly in these deep drawdowns because I didn't stick to my rules? And what's the future cost of that? Because now my account's tied up, especially if I'm not risk managed, right? And I've got my accounts tied up, and there's an opportunity cost to that, right? So I should be saying. Because now there's other opportunities that do meet my rules that I may not be able to take, or I may be able to take it, but I can't trade at the size that I want to because I've got other trades that are tying my account up, right? So we have to think about that in those moments and where, you know, we're not being disciplined and sticking to our trade plan, which happens to all of us, no matter how many years in the game that you have, right? Here's another impulsive, right? See, okay. Here's a nice pullback there, right? That would meet your rules if you like deep corrections. And now I'm in. And see, if I have a higher time frame target that I'm chasing, right? If we're coming off that daily and we say, man, our daily D extension is here, we caught off the trend line. Now I'm either taking it fib to fib or getting in. I got a good initial entry on the low, and then I'm looking to add to my position based on my trade plan. Okay. So if I take this setup here, if my target is a 1.618 up here at 96.17, that's a daily level. And I've been blessed enough to catch this move and it hit my sweet spot and I'm in, and I want to swing trade this and I want to ride it out. Now I'm looking for opportunities to add to my position. But when I'm looking to add to my position, I'm still going to stick to my rules. So with this new AB boundary here, okay, A, B, all right. If I'm in this trade long off this fib, this didn't give me an opportunity to add to my position based on my rules. I needed that trade to correct deeper for me to add to that position. You guys follow me on that? Drop me a 3. Okay. If you think your way through the process, you can take the same approach no matter what the pair. And that's key. And the reason why we say, you know, hey, when we're swing trading, we make sure we do our homework and we look at all the pairs, because that's how you end up in baskets, right? And you're trading a basket of currencies, right? So you could be, if I spot it and I do my homework and I'm like, oh, I'm Aussie long and it's looking like it's Aussie long across the board, then I can trade small and I can look for sweet spots across all my Aussie crosses and I can get in on those trades, right? I can get in on those positions, right? Trading small and accumulating pips, okay? So this is where we are. So right now, okay, we're looking for that C to D push. Now, if we're wrong, right, and the ride comes to an end for whatever reason, if we've been in off the low, we're adjusting our stop as we move up, right? So if bought my position at the lower fib, okay? And this has been moving up. Well, this is my new active fib. I've moved my stop way up here now, below this A. That means all of this is profit. If it reverses on me now and takes me out, I've still been able to make money, right? If this is my initial fib, then my stop's just below the A. And I'm letting it take the ride. Now, can you play breaks and retests all along the way from the C to D? Absolutely you can, right? That's why we wanted to take it all the way back to the nuts and bolts. Absolutely you can. Retest, push up, back down, retest, right? So you can play that game or you can just swing trade and let things play out. Knowing your risk before you ever take the trade. That's the key. That's what enables you to sleep at night. Knowing that if I lose, I'm out of 1%, 0.5%, 1%. And you're comfortable with that, go to sleep. Right? Let the position accumulate. All right. So that's where we are on the Aussie cat. So if you work your way down through the charts, you can start to see it, right? Zoom out. Oops. You just zooming in, right? Here it is on the 1. So you can see how that came up just shy. And now we're accelerating. Okay. And those deep corrections are nice because the risk to reward is huge. If you put your stop below the A, you just have to be patient enough to wait on it. Right? So here's that daily 1.618. So whether you take it down to the 1 hour, the 15-minute time frame, okay. All right, so we remember that one, right? We posted that one, the Aussie cat, on the 15. See it moving? That's it. Any questions?
No.
All right. All right. So we'll go right back here. Look at your center, right? And you'll start to read these, right? So we're kind of neutral. And you'll see when you go to the charts, strong buy, like you see across the board buy. Look at the euros, how bullish it's been. Okay. You see here on the Euro Aussie, how you've got two strong currencies. You see how we've got that mix there? Now it's starting to get mixed. It's a neutral, it's a buy, a strong sell. You see that, right? See how you've got one extremely strong currency versus a weak one, and you see how it's a strong buy across the board. Look at it against the Swissy. Look at it against the pound, right? Look at it against the Euro JPY, right? Look at it against the Euro USD. Now look at the pound Aussie, where your Aussie is your counter currency. See how they relate, right? Look at the pound CAD because the CAD's been subdued because of oil. Look at your other commodity currency in New Zealand, right? Look at what the pound's doing against it. Look at what the pound's been doing against the dollar because of dollar weakness and the correction, see? Okay. So if we look at the Aussie Swiss, we're gonna take a look at it, okay? See how, you can see why it says, look, it's neutral, okay? Like to say bullish to neutral, right? Because it pushed back up to the top of the range. Okay, look, see? See how it pushed back up to the top of that range? But it had to get bullish to get there. So we deploy our fibs in a bullish capacity. Now, right now, this current fib, we got a 1.618. If the momentum picks back up, we form a low here potentially. Okay, we've got one there already. So we could come in here and put your smart support in. See, that's a 4-hour level. That's holding right now. Price is respecting that. Okay. So you see how I can get there in different ways? See, so if it's going to go to this D extension, you see how it breaks and it retested it. It broke through the levels and then it came back to retest this level. It's the same thing. It's the same thing, right? So our projection though is this 1.618 D extension off the 4. So depending on what time frames you trade on, you might say, you know what? I like going in and off the 5. I'm gonna use my 4 hour for my direction. And right now we're bullish. I got a 1.618 at 64.60. I'm gonna track that down all the way down to the 5-minute chart, and I'm gonna look for bullish breaks and retest or bullish fib buying opportunities all the way to that 4-hour level. Right? It's all about determining your directional bias and setting targets. Okay. Even if you break, right, you go down to the 5 and you say, you know what, if I get to break at this level, I'm going to try to take it to 63.88. That's going to be my day trade. Boom, that's fine. Right? But you're looking to do it in a bullish capacity, right? If you can get that. So it's moving in waves. So even though we get these waves, higher highs and higher lows, okay, the overall trajectory is still here, right? It can do the dance. It can press lower. It can drop to 78.6%, 86%. As long as it don't take out that A, it's gonna go your way. Don't know when, don't know how long, but as long as it doesn't take out that A, it has no choice but to go my way. If it takes out that A, I already know what I'm risking. I'm cool. I'm cool with that. But let's zoom in on it, right? Waves get smaller. See that? Okay. A, B, C, D. A, B, C, A, B, C, potentially D. Until it fails. That's all we can do. That's it. Any questions on the Aussie Swiss?
Benny, just a quick question on the fib. You know, when you drew the fib on the 4 hour.
Yeah, let's go back and check it out.
Yeah. Now, if you run a sub fib, in that
Right off of here?
fib, yeah, the low to bottom up, yeah.
Yep.
Does that fib representative of the 1 hour fib?
Correct. Correct.
Okay.
Absolutely. Okay. Absolutely. You got it. Fractals. You nailed it. You see it. And once you see it, you can't unsee it. Congratulations, sir.
Thank you.
You're welcome. Each higher time frame, each lower time frame is a fractal of his higher time frame, of his bigger brother, right? That's what we talk about. The tree trunk versus the tree branch, the branch versus the twig. The twig is just a smaller replica of the tree branch. That's it. And if you did it on the 1, you see it on the 15. 15 to the 5. That's what you're seeing. Yep. You got it. You got it. It's just price just stacks on top of it though, right? Moving through the time frames. And then it just depends on how granular you want to get. Okay. So there we go. Right. So right now, so look, great retest, great retest. This just helps me, right? So it's like, man, what do you mean stay in the trade for however many pips, right? So you can play the break of retest, but I stayed in it because I got a 61.8 pullback and my bias is bullish. So I'm projecting a 1.618D extension, which is right around a 64.53 level. Right? You just come in and say, oh, I'm looking to take this to the 64.53 level. That's the game. That's the game. Great observation. All right. So let's move on, right? Take a look at the Aussie yen. What's it doing? Okay. True. Overall long. Okay. Overall long. See, it pressed down, right? It came down to the support level. Okay. So it's trying to break out. It's trying to make that swing, right? So we get it, right? A little bit neutral there, right? And then as you move through, look, right? How that's pushing. See? See that? We're at 382 on a daily, right? But even without the fib, it respected the level. 1, 2, 3. Probably look left more times than that. But we've broken back above, right? This 9104. Right? So we come up off that leg. This is where it is right now. This is where it is right now. So this initial move, right? So this is where patterns and structure come into play. This initial move, I've got a rectangle around it. Why? Because just raw price action, just raw naked price action right here, that's a double bottom, right? That's a double bottom. So those are your caveats, right? When you're looking at a trade coming off a higher time frame lows, right? That's a double bottom. I'm looking to initially take that off. I get swing low that comes back to respect this area. It reconfirms support. I run a trend line break. Probably just gonna take that, right? I'm probably just gonna take that. But if you missed it and it's taken off and your rules say, I like 61/8 or deeper, then you're gonna wait for that to come back down, right? If you're trading with the trend. Hey, I'm looking for this to continue bullish, but that's not my low price on this current fib on the 4. It's not my low price. This your chart you're trading off of. I need that. I need that to correct. I missed that initial entry. Okay. Missed that initial play. That's okay. I've got other pairs to trade. What if this comes back down and retest this area? Okay. And it holds, I'm gonna look to get long. Okay. I'm gonna look to get long to the target. If it continues to push, gets impulsive, doesn't give me a deeper correction, I have to be willing to let that pass, right? If I'm using a fib and my game plan says I trade at 61/8 or deeper, 50% or deeper, whatever your rules are, I have to be willing to let this pass. And if it catches the D extension off of this shallow retracement move, that just tells me the bulls are in control. It's the D extension. Next fib setup, I'll look to make a play if it meets my rules and my conditions. You have to be stubborn. You have to be willing to sit on your hands, right, for these swings. Now, if I'm just looking at this just price action and I'm a break and retest type of style trader, like, oh, this just broke and came down to retest the zone. I may look to take this right back up to 91.82. Okay. Different perspective. Different perspective. Okay. And that's what the journey is all about. Okay. Oh, it broke this level. If this creates, because this is in my 80-20 zone, everybody sees that. And we just what? We just scored a point. We scored a point. We took out a major high. We scored the basket. Now we run back to the other end of the floor to play defense, right? Scored a point, pull back. If that's your thought process, then it's like, oh, this is my 80-20. Boom. I may try to play this back to the 382, back to the 61.8. If I'm a break and retest guy, it's the same scenario to the downside, right? If price comes here, bang, then if I turn over and take out this low, then I want to see it come back and retest this zone. Right? Back to this level. Okay. And on down, if that's your style of trading. But hey, even using the fibs can alert me, right? If I'm that type of trader, fibs can alert me because that's a potential 80-20 there. So there's a probability that that's going to come down for a deeper retracement. I can break and retest going south. Everybody understand that thought process, right? Drop me a 4 in the chat. Okay. See it, think your way through it. Don't have to be in a rush. And when in doubt, stay out. Okay. If I'm a bull, I'm waiting for a low price. If this one got away from me and I'm not involved in it. Spotted the double bottom. Oh, I missed it. Well, if it comes back to me, then I'll look to right. Especially if nothing changes, right? With the sentiment, the markets just continue to push the way they want to push on the stock market, and we stay risk on. Right? Oh, if I can get a correction and a low price, I'll take a shot at that. If I lose, I'm out of 1%. I got 99 more chances left. That's it. That's it, right? See what's going on the one smaller wave, the fractal. Look, see. Time frames control the lower time frames. This got a deeper push, almost a 50% here. Reacted, pushed up. Okay. See what happens. Okay. Same W pattern. Zoomed in, lower time frame. Any questions on the Aussie yet?
Yeah, Benny, I have a question.
Mm-hmm.
Yeah, so considering the 4 hour, the last fib showed that we are on a bullish trend and also the fundamentals. But if you run the fib from the 98.51 on the 4 down, it looks like yeah, 98.51.
Round this zone?
Yeah.
Yeah. Oops, hold on. I didn't hit that right.
Yeah, I think it's correct. Yeah, and you hit it from.
Oh, okay. So
yeah. Yeah, it looks like on a larger perspective, it's on the 618 zone with a possible retracement. So looking at that and the sub fib, how do you kind of explain it? Because it's a little bit confusing to me.
So this is where, and it can be. This is where your directional bias comes in, right? And your fundamentals. You see? So this is where it gets a lot of people, which is why, towards the end of last year, I started telling people like, well, if it confuses you, then just take them off and then just play your trend line break. You see what I mean? Because it does confuse people. Because here's the whole concept with the fibs. In order for it to have come back down to this key level and reversed, it had to make down ABCDs, right? Had to make down ABCDs. So that fib is still active, right? Until it takes out that A. So this is where your fundamentals come into play and your directional bias, right? I see it coming down technically to a key level of support. Okay. And I say, all right, it comes down to these levels reactive before I'm looking to buy. What determines whether I look to take it long term, right? Even though I know, right? Because it had to come down. It had to correct to the downside. So I'm going to have ABCD waves. What holds me strong when it's in the middle of that zone, like you're saying, okay? But what keeps me strong to the upside is my overall fundamental bias on the Aussie versus other currencies. See what I mean?
Yeah.
So that's what causes me to eliminate this. And because I have a directional bias that is bullish based on my fundamentals and my sentiment for the Aussie, and because the market, right, at least right now, we got Thursday coming up, appears to be shrugging off the Fed and is bullish, right? I'm going to deploy these in a bullish capacity, especially after I see a failed breakout. See here? And a double bottom. See what I mean?
Yeah.
Failed breakout and a double bottom. So a lot of times that's the fundamental piece, is the pieces of the puzzle that people miss, right? So that during those times where it's like, oh, it is. In football, we used to call it betwixt and between, right? Where you're a defensive back and you got two wide receivers like Hellfire missiles running 9 routes down the middle of the field going long. And it's like, based on the defense, I got to choose one, right? And I've got to live with the results of this. Either I'm about to make the right play or we're about to give up a touchdown, right? That's it. They caught us. So based on the fact that I know you still have a huge monetary policy divergence between the Aussie dollar, the Australian economy, the central bank, and the Bank of Japan, being that, we did see a sharp decline on yen crosses because of the policy decision that they made with the Bank of Japan towards the end of the year. But I don't expect the impact and the emotions that were flying as a result of the Bank of Japan decision to outlast the key aspect of the Aussie that has me fundamentally biased, right? So right now I'm saying I'm choosing the Aussie, right, over the medium to long term over the yen. Okay. Now, if I'm wrong, it's going to stop me out. Okay? If we get a fundamental catalyst that creates a risk-off situation, and I'm wrong, it's going to stop me out. Market sours, sentiment sours, goes risk off. Negative for the Aussie, positive for the yen. Yen is considered a safe haven, right? Even though for most of last year, it really didn't act as much as a safe haven because everything went to the dollar because of the aggressive rate hikes, right? So that's my thought. That's my thought process on that. Because you're going to come across that a lot, right? You're going to come across that a lot where you get priced to make ABCDs in one direction. Right? ABCDs in one direction. Okay. And you're gonna be like, okay, what decision do I have to make? That's when I go into my fundamentals and say, well, fundamentally, I think this is gonna continue long. There's not a reversal that you're gonna play that you're not at some point gonna be in this position. Right? That you're not gonna be in this position. It's gonna start out as an AB move, right? Or it's gonna start out as a 80-20. Right? and then it's just going to keep running. Like, let me see if I can find an example for you. Because you ask a really good question, right? You're at a crossroads, right? So if, let me see here. Here, on your Aussie dollar. At some point, this was in the same exact situation. Matter of fact, this one was at 80-20. You see that?
Yeah.
Where you had this down AB boundary, this one actually pushed into the 80-20 zone up against weekly support. But at some point, you were at your 382, you were at your 61.8 target, you're at your TP3 target on that 80-20, right? And you had to make the determination, and that's where the fundamentals come into play is, man, this dollar is correcting. It's falling off of a cliff. Aussie strong, the stock market is rallying, commodities are looking good right now. I'm going to stay long. I'm going to stay long. Or what you can do is you can have rules and say, you know what? I'll play it to my targets, 2 targets, for example. And then what do we always say in a reverse? As long as price doesn't take out the A, it has no choice but to go my way. If my A gets taken out, then I'm thinking, hey, this may stay bullish. So if I catch this fib after the A boundary is taken out, that next fib to the upside, like right here, I may make the determination to get back in because it took out my A. I'm correcting, I'm holding, and now I want to get back bullish. Okay. So there's always a point where you're playing trend reversals to where you're gonna have to make that decision because you're looking at the trend reversing from his previous trend, which is to the downside, and then look at the swing. Same thing with your Euro USD, right? At some point, we saw, and I know we said I was going to end this early, but you guys are asking some really good questions. So we're going to keep it moving. This, at some point, look at that, right? That price was making down ABCDs, see? And we failed to break out to that D extension. We held at this 95 level and the market took over. So we're still in this zone. But fundamentally right now, you've got a hawkish ECB. Everybody's waiting on the CPI report from the United States and to see what the Fed is going to say afterwards, right? The market is banking on the Fed softening. Fed saying don't be so fast. So, right, these are the decisions that we have to make as traders. Okay. Yeah. Okay. So that's that. Okay. But you know what? I'll tell you, it's a good problem to have. Because what that means is you've gotten your directional bias right. You picked the proper level where prices has a high probability of reversing, you know? So I'll deal with those tough decisions any day of the week. You know, if I'm up and I'm correct and I'm up big off the swing, you know, so, and it's tough. It's tough. There's times where you'll be up huge and you're trying to manage the trade. You may not get to it in time and you give money back. You give money back to the market, you know, and things like that, where you're like, man, I should have took it off the table. But it's not an exact science. It's not an exact science at all. Right? We just do the best we can. Right? Here's our Aussie NZD. See, at this point, look. All right. See that 80-20? You see how it's swinging? If that's you've crossed over, right? And it's right off that swing. It's beautiful. Now that's gonna stay bullish. It'll take that A out and it'll continue. Okay. So this is an example where it's like, you know what? I took that to the 382. Maybe I'll try to get to the 61.8. If I'm like, all right, this is getting a little shady, maybe I get out, see what happens. And then if it takes that A out, then you come right back into price action and structure. I get a break and a retest of 110.42, then it's probably gonna look to continue long, right? And then we're just running the staircase, scoring a point and pulling back off the swing highs and the swing lows, right? You can see A boundaries. Boom, boom. Those are all swing highs. Right? It's the same thing. Same thing. Right? So it's your Aussie NZD. Because of the reversal, it's been moving bullish. Right? It's been moving bullish. Right? See, look. See, it came through and broke through that level. That's beautiful right there. We got to make a decision. Are we going to come down and retest this level? It's a strong candlestick. Do we retest and hold and continue? We shall see. But right now, you got that direction right. Bullish off the low. Okay. So whether this is going to end up just a correction or a longer term move to the upside, is bullish. Any questions on the Aussie NZD?
No.
Okay. And okay. See, look, that huge correction off that level. We already know on a lower time frame, that's a trend line break, and it's been making ABCDs to the upside. When it comes into those key levels, right? If we're patient, if we're swing trading, our eyes have to light up, right? See how that reversed? And we're pushing through that level. It struggled, but now we're trying to push through that level. We'll see what happens on Thursday. These are the moves, but look as we move down to the lower time frame, what price is doing. Look at that. Now, this is my initial opportunity, right? If I get on my charts and it's like, oh, I got a new fib. Well, if I'm bullish, if I have a bullish bias, Aussie's been long across the board, I'm gonna see. Am I gonna correct? Right. Is price gonna give me that discount that I'm looking for? It's been a nice ride so far. Let me see if I can pull this one off. I'm thinking bullish. An Australian dollar. Hey, that's what price has been showing me. Stop below the A. If I get the low price, I look for confirmations. I grade my trade. And if it looks good, I look to get long. If it's time for this to fail, it's going to fail and stop me out. Yeah. But there's the swing, check out the A. That's how the fib game is played. That's it, right? So if you look on the opposite end, and since we covered the Aussies, if we go and we look at the pound Aussie, okay, well, it's been moving in a bearish capacity, right? Over the last few weeks. So we look and say, hey, we want to try to find an area to deploy our fibs to the downside, right? It's a longer overall trend there. Right. So look, let's start dropping the fib. Let's see what we get. Okay. All right. Took this out. Been ranging a bit. Here's this long move to the downside. So this is why you're seeing that bearish move. See? So 80-20 move. If it's going to correct, we're moving bearish. It's been strong. The Aussie's been strong. So now you got extra confirmation with your 118, 127 zone, and it's been pushing bearish. Now we know if we come to 174.58 and we break, then we're looking 382, 61.8, and on down. So when I come in here, because it's a long move, it's a daily perspective, I'm bearish because of that. So I'm just going to find, right, that impulse leg, and I'm going to run it bearish. And that's how I find those type of setups. Just where I am. Okay. Now, if I'm looking for this level, right, I would love to see price. You say, you know what? I'm bearish. I seen it on a higher time frame. It's correcting. We got a strong Aussie right now. Okay. Now I would love to see this correction into my zone. Then look to take it. Okay. Like that. If we don't get it, and we just turn over and we break this 174 level, and we come down and we hit the D extension, you know what? Knowing what I see on a higher time frame, that this could just be a major correction to the downside off of that upfit that we drew. And we need to get to a 382 target. So if I come back to the daily like this, and I mark my target, this, there, okay? That's my 382 target. I'm bearish. All right, I'm in an up retracement zone potentially here. Plus, fundamentally, I've got a strong Aussie. So it's always a matter of, am I in a C to D push zone with the trend, or am I in the up retracement zone, a counter trend move that's got me moving bearish? Right now, I'm in a counter trend move that has me moving bearish. Okay. Now, here's my 4. There's that 382. Right. So by the time, if it breaks this level, you might not even get maybe you get a break and a retest of that level and you can play it like that. Right. But if it doesn't pull back to a high price prior to breaking that level, it might just go right straight to that 382. Right. So that's a bit of a funny play the way things are lining up. But if you get it to push up higher, then you look for a potential short, put your stop above the 8. If you're wrong, the market's going to let you know. All right. Market's going to let you know. Okay. But this is showing you, right, how things are moving, right? You got it when it's your main currency, right? Your primary currency now is saving your base currency, as they call it, but now it's serving as the counter currency, and it's been strong. And this is a pound pair, so may not look like much, but that's down over 700 pips. All right. And if it becomes long term, right? If it becomes right now, it's just a correction. But if it becomes long term, it's going to do what? Take out the A, and it's going to keep moving to the downside and continue. We have questions. Kim, then Jerry.
That's okay. You answered it in a couple of reels back, so I'm good. Thank you.
Cool. Yep. My bad for not keeping up with the chat. You're welcome.
No worries. Thank you.
Appreciate it. Jerry. No. Okay.
Oh, I'm sorry. I was muted. Can you hear me?
Yep, I can hear you now.
Hey, Benny. Just a quick question. On the investing.com, the 5 hour, it says neutral.
Yep.
So what is that saying? Is that like consolidation?
Yeah, it's just you're kind of like in the range, right? You see how so if you come down to like your 4, right? And you can actually see it better from the daily. So you see how it's kind of like you see this here, how it's just moving sideways,
Okay.
right? How it's just moving sideways there. And then when you look at it from an even larger picture, right? You see what it's been doing.
I
Right? You
got you.
see that?
Yes.
You know what I mean?
Mhm.
But even here
Yes.
on your 4, right? You see how it's kind of just doing the dance. So it's kind of neutral. That's why I'm focused in on, right? We're retesting this area. See this here, these levels?
Yes.
How it just double topped right here in this area.
Yep.
So it's like,
Yep. Yep.
okay, do we want to eventually push and break that zone and push higher? Or are we gonna come down and just take out this level? You know, and maybe you get a break and a retest to continue down. But if you play the 80-20 off a higher time frame like that, it's monstrous. That's where we key in. Those are powerful. Like anytime you see like a D extension get hit on a weekly, a daily, you know, time frame where it moves into that 80-20 zone after shallow retracement, your eyes light up, because if it makes that correction, a lot of times those are huge moves and
Yes.
huge reversals where you can just accumulate pips, trade small and just accumulate pips to the downside, right? Because that could represent just a major shift in momentum in one direction or the other. So those chart zones are very, very strong, very, very strong, especially at a higher time frame.
Okay. Thank you very much.
You're welcome. You're welcome. Any other questions before we wrap things up? Hope this was good for everybody. I know we've been focusing on, you know, real hard on support and resistance and top down, end of the year, beginning of the year. But now just to put those fibs back on top, and hopefully it's not as scary to some people, you know. You know, I hope it helps. I hope it helps everybody.
Yes.
Yes? Okay. Yeah. And then, like we say, sometimes if you can't determine a direction, or if you're in a higher time frame and it looks choppy, and you can, if it's a range, you know, look, if it's in a range, you get down to the bottom of the range, it's still gonna move up in ABCDs, it's gonna come down in ABCDs. Okay. But if you can't quite see it, you can't just move on to the next pair. You know, that's the beautiful thing, is once you get all your charts set up, then it becomes just a daily routine of going through and clicking through your charts at whatever chart level, whether it's your 4 or your 1 or your daily. It's like, is it in my sweet spot? Is it in the 80-20? Is it retested an area? And you're just clicking through it to where it'll take you 10 minutes to go through all your charts, especially if you've identified them coming out of the weekend. Doing the ritual, like, is it in my zone yet? If not, you just keep it moving, right? This is a game where you don't have to be in the market all the time to make money. You just don't, you know. But when your trades line up, like how all of those, you know, you could trade those as a basket, like how all of those Aussie pairs have been moving long, you can take small positions. And when they come into your sweet spot, you can jump in there, take the trades. So that's it. Great session, everybody. Lots and lots of great participation and great questions being asked. We are going to wrap it up for tonight. I'll be right back with all of you tomorrow, 6:30 a.m. Eastern Standard Time, and I look forward to it. Have a good night, everybody.
Thank you. Good night.
Good night. Thanks, Jerry. Appreciate the feedback.
Cheers.
Cheers.